And welcome to another video. In this video, we will be solving Principle of Accounts Paper 1, Variant 2 from October-November 2015. So let's get started with the first multiple choice. Multiple choice 1. What is prepared by a bookkeeper? So you have to concentrate on this word bookkeeper. Appropriation account, no, it has nothing to do with bookkeeper. If you see income statement and financial position, they will be prepared by an accountant because you need more understanding how income statement is prepared, the format, and it's a little more detailed. So the answer to multiple choice 1 is it's option B, which is cash book, because cash book is very rudimentary. It's very basic. You have to just take into account how much cash has gone out and how much cash has came in. So the answer to multiple choice 1 is option B. Multiple choice 2, a trader provided the following information. What was the total of non-current liabilities? So here, basically, you need to calculate the total of non-current liabilities using the accounting equation, that is asset equals to liabilities plus equity. So you have been given capital, which is basically equity, then you have current assets, you have non-current assets, and then you have current liabilities. So you can have a total of assets here, right? So 300,000 plus the 26,000, this will give you the total assets. And then you have current liabilities, whereas you want to calculate the NCL plus the capital of $250,000. So if you sum the total of assets on this side, the asset side, that comes to 326,000, right? 326,000 is the total of assets, and this total sum of liabilities plus equity at this moment is 250 plus 15 is 265, right? So 265,000 plus the NCL. So you see there's a difference here. There's a difference. This should be equal because that's what accounting equation is. Assets equal to liabilities plus equity. So the missing number here is the non-current liabilities. The difference between 326 and 265, 326,000 and 265,000 is 61,000. So the answer to multiple choice 2 is option B. Multiple choice 3, which item would be recorded by a credit entry on an account? So you have to focus on the word credit entry in account. A decrease in capital, that is debit. A decrease in liability is a debit. An increase in asset is a debit. So in other words, you need to remember what accounting rules are in this case, right? What's the accounting rule for journal entries? In an increase in capital, that's credit. So answer to multiple choice 3 is option D. Multiple choice 4, Harvey bought goods on credit from Janet. So Harvey bought goods on credit from Janet. The goods were unsuitable and Harvey returned them to the Janet. So basically customer returned goods to the supplier, or let's say the seller. Which document did Harvey send to Janet? So Harvey is the customer. Harvey is the customer, and Janet is the seller, right? So which document Harvey will send for the damaged goods to Janet? And that's always debit note. So the answer to multiple choice 4 is option B. Multiple choice 5. On 1st May, Bashir purchases goods on credit with a list price of $200. He is given a trade discount of $20. If payment is made within 28 days, a cash discount of $10 will be given. Which amount is credited? Which amount is credited to the supplier's account on 1st May? So what would be the accounts payable amount, right? What would be the accounts payable amount? Now the payment has not been made, so we will disregard this $10 of discount. We will only take into account the trade discount of $20. So the amount that will be credited would be $180. That is 200 minus 20 equals to 180. So the answer to multiple choice 5 is option B. Farouk sells goods on credit. A check from Ahmed, a credit customer, was dishonored by the bank. How does Farouk record this? So basically, this is a trade receivable. This is a trade receivable, and the customer was not able to pay because the check was dishonored. Therefore, you would have to debit Ahmed again, and then credit the bank because you did not receive the money. Farouk did not receive the money from Ahmed, so therefore bank credit and Ahmed debit. That's your accounts receivable. So the answer to multiple choice 6 is option B. Multiple choice 7. Sally buys goods and is allowed a discount for early payment. So Sally is the buyer. Sally is the buyer and is allowed discount. So now don't get confused with discount allowed here. You are allowed discount. Sally is allowed discount. That basically means discount is received by Sally. So you see, there would be these little English tricks over there for you to confuse you. So do not confuse this word allowed with discount allowed. Sally is not being allowed. Sally is being allowed a discount. In other words, Sally is receiving discount. How does Sally record this discount, right? So if you see discount received is always credited. So the answer to multiple choice 7 is immediately option D. It's not option A, it's not option B. So the answer to multiple choice 7 is option D. Multiple choice 8, which item is presented by a debit balance on a ledger account? So debit balance on a ledger account. Accrued expense is a liability because company has to pay, so it would have a credit balance. Liability has a credit balance. Prepaid expense is an asset. This would have a debit balance. Revenue has a credit balance. So the answer to multiple choice 8 is option C. In other words, it's really important to remember the basic accounting rules. Whenever asset increases, you debit, asset decreases, credit. So these sorts of rules are important to answer multiple choice and to do good on the exam. Multiple choice 9. The following appears in the ledger of Chan. So in the ledger of Chan, there's a Fu's account. It has an opening credit balance. In other words, this means that Fu is a trade payable. So Fu is trade payable. In other words, Chan has to pay Fu. So let's see which statement is correct. On 1st August, Chan is owed $100 by Fu. No, Chan actually owes $100 to Fu. So not by Fu, it should be to Fu. So therefore, this is an incorrect statement. Well, option B, on 12th August, Fu purchased goods $250 from Chan. Fu did not purchase the goods. Fu sold goods. So Fu sold goods. So this statement is incorrect as well. On 28th August, Chan paid Fu $100 by check. So if you see 28th August, bank $100, yes, this is true. So the answer to multiple choice 9 is option C. Multiple choice 10. The following ledger account appeared in the books of a trader. So there's this rent account, and then it has a debt. So it has a brought forward on credit side. It has a brought forward on credit side. So what does the balance on 31st December represent, right? So this balance of balance carried forward, which is brought down on the credit side, it's actually a liability. It's actually a liability. So therefore, the answer to multiple choice 10 is option A, that's rent payable is outstanding. Multiple choice 11. On 1st January 2014, a trader had prepaid journal expenses during the year. Further, general expenses were paid. On 31st December 2014, general expenses were accrued. How did the trader calculate the general expenses for the year ended 31st December 2014? So the general expenses that would be included on 31st December, it will include the amount paid, plus the opening prepayment, plus the closing accrual. So the answer to multiple choice 11 is option A. Multiple choice 12. A trader decides to change his provision for doubtful debts from 2% to 3%. So increase in provision of trade receivables. Which entry is made to record this? So to record this, of course, you will do debit income statement and credit the provision or the allowance, because this will increase the expense, and that's what is being done here. So from 2% to 3%, there is an increase in expense, and if you want to increase an expense, you debit. So the answer to multiple choice 12 is option C, debit income statement and credit provision for doubtful debts. Multiple choice 13, which item is a capital receipt for the owner of a bakery? So cash discount from a supplier, that's a revenue receipt. Cash from sale for a wedding cake, so that's a revenue receipt. Proceeds from the sale of an oven, that's a capital receipt. So the answer to multiple choice 13 is option C. Multiple choice 14. Hassan depreciates his machinery at 20% per annum using the diminishing reducing balance method. No depreciation is charged in the year of disposal. He provided the following information. How much did Hassan charge for depreciation for the year ended 30th April 2015? So you have to calculate the depreciation using the rate that's 20% for 31st on 30th April 2015. So if you look at the net book value, so this is opening net book value, that's 36,000. That's 36,000. During the year, this machinery was disposed of. So minus the 4,000 minus 1440, and you would have some number here which you should calculate by yourself, and then you would apply the rate of 20% to this number, which will give you the depreciation expense for 30th April 2015. So if you do the math in here, if you do this math in here, the answer should be 6688. That's option B. So the answer to multiple choice 14 is option B. Multiple choice 15. Which statement about depreciation is correct? In the diminishing reducing balance method, the depreciation charge increases each year. No, the depreciation charge actually reduces each year. In straight line method, the residual value can never fall to zero. That's again, it's false. Option C, the straight line and diminishing reducing balance method are both suitable for loose tools. Not necessary. This is not the best option, to be honest, because straight line method or reducing balance method can be suitable for any non-current asset. It could be machinery, it could be, this is very arguable, option C. So option C is not the best option. Option D, the straight line and diminishing reducing balance method can both use a percentage rate. Yes, this is correct, most correct statement, because both of the methods can state the rate of depreciation in a percentage form. So the answer to multiple choice 15 is option D. Multiple choice 16, Henry has charged Thibault interest on his overdue account. So Henry has charged, so basically Thibault is a trade receivable for Henry. Where does this appear in Thibault's control account? So Thibault has purchased, right? Thibault has purchased. So this would be on the credit side on the purchase ledger control account. In other words, this means that Thibault now has to pay more, right? The original payment, the original sum plus the interest. So the answer to multiple choice 16 is option A. Multiple choice 17, Brian's inventory included item which had a cost of $240. The item needed repair at a cost of $30. After repair, the item could be sold for $260. So this is basically using lower of cost or NRV, because that's what question is asking, at what value should the item be recorded in Brian's inventory, right? So it's either lower of cost or NRV. To calculate NRV, we will just simply do 260 minus 30, that's 230. And then the cost is 240. Which one is lower? 230 is lower. So the answer to multiple choice 17 is option A. Multiple choice 18, Ram provided the following information on 31st December 2014. How much were the owner's capital and capital employed on 31st December 2014? So capital employed is basically sum of owner's capital plus the long-term loan. So this number here is capital employed, and this number here is share capital or the owner's capital. So the answer to multiple choice 18 would be option D. Multiple choice 9, on 1st January 2014, Bill started a gardening business. He provided the following information for the year ended 31st December 2014. On 31st December 2014, customers owed Bill 1720. What was Bill's profit for the year? So you have to calculate the profit. Profit is basically revenue minus the expenses, right? Revenue minus the expenses. So it's fairly easy question. So you will first thing you would calculate the revenue. So revenue would be 19,500 plus the accrued amount, because you must receive this. You must receive this from the customer, even though you have not received it yet. It's owed, but this is what you have sold. So this is your revenue. Whereas when it comes to expenses, you would take 280. That's van expense plus the guarding machinery expense 150, and then the general expense of 6,000. So if you calculate the total revenue here and the total expenses here, profit is going to be the difference between total revenue minus the total expenses, and the maths is up to you because you must practice. And the answer to this question, multiple choice 19, would be option D. Multiple choice 20. Rajat and Sunil formed a partnership on 1st January 2014, but did not prepare a partnership agreement. They provided the following information. So we have the following information here, which we will look at it. They decide to draw up a partnership agreement for future years. Which item would be the most beneficial to Rajat in 2014? So let's look at, so capital introduced by Rajit is 40,000 and Sunil 20,000. So Rajit has introduced 20,000 more. And then we have the drawings and the share of work, which is 50-50. Okay, let's look at the options. Interest on capital, interest on drawings, limit on annual drawings. This is not beneficial. Partnership salaries, we don't know. So this is question mark there. It's inconclusive, I would say. And then on interest on drawings. So if you see Rajit has more drawings, so this is not beneficial. This is not beneficial because he would be paying more interest. Interest on capital, that's more beneficial because he has introduced more capital. He has introduced more capital. So he will earn more interest. So the answer to multiple choice 20 is option A. Multiple choice 21. X and Y were sole traders. They decided to amalgamate their businesses and to share profits and losses in the ratio of 2:1. They brought into the partnership assets of 30,000 and 29,000 respectively. Y's assets included goodwill of 9,000. Goodwill was not to be retained in the account of the partnership. What was the opening capital each of the partnership? So basically the opening capital would be net off from the goodwill, right? So capital, so assets introduced by partner X and partner Y are as follows. The sharing ratio is 2:1, 2:1. So to share the goodwill, it would be 9,000 times 2/3, which comes to 6,000, right? So this would be minus 6,000. This would be minus 6,000, and then we have 9,000 over 1/3, and that comes to 3,000. So this would be minus the 3,000. So this comes to 24,000, and this will be 26,000. So the answer to multiple choice 21 is option B. Multiple choice 22. Hill Tennis Club received 32,000 in subscription during the year. At the year-end, subscriptions of 350 were owed by the members and 450 had been paid in advance for the next year. So it would be 32,000 plus the 350. The total that should be received. How much was transferred to the income and expenditure account for subscriptions minus the 450, because this is prepaid, this is accrued, and this is what was actually received. So if you do the maths in here, 32,000 plus 350 minus the 450, you will get an answer of 31,900. So the answer to multiple choice 22 is option B. Multiple choice 23. A sports club was formed on 1st January 2014. During the year ended 31st December 2014, the club purchased an equipment costing 5,000, paying by check. In which of the club's financial statement did this appear? So this is an asset. This will definitely appear on statement of financial position. So now you have three options, of course, right? You can eliminate B. You can definitely eliminate B. This will never appear on income statement. So you can cross out this, which is, you can cross out option D as well. And if you look at option A and C, it will appear in the receipts and payment account because this is like cash flow statement. So this would be negative cash outflow. So the answer to multiple choice 23 would be option C. Multiple choice 24. A trader does not keep a full set of accounting records. How is the profit for the year calculated? Closing capital minus the opening capital minus capital introduced plus drawings. The answer to multiple choice 24 is option A. Multiple choice 25. During 2014, Rogers Credit customers paid him 6,200. They owed 1,800 on 1st January 2014 and 4,300 on 31st December 2014. Cash sales for 2014 amounted to 26,800. What were the total sales for the year? So total sales equals cash sales plus the credit sales. And credit sales are sales for which business has not received any money. So let's try to calculate the total sales here. So first of all, look at the difference between the opening and the closing trade receivable. So my opening was 1,800, and then my closing was 4,300. So there's an increase in my trade receivable, right? So this would be for credit sales, right? This would be for credit sales. So now I will take 26,800 plus the customers that paid me 6,200, the credit customers that paid me 6,200, plus this increase, which I will call X dollars, and that you will calculate for your practice, right? So 26,800 plus 6,200 plus this X amount, this should give you the final answer as 35,500. So the answer to multiple choice 25 would be option D. Multiple choice 26. Which item would be entered in statement of changes in equity? And that's ordinary dividend paid. So multiple choice 26 would be option C. Multiple choice 27. Z Limited provided the following information. What were the total shareholders fund? So this is talking about shareholders fund, which will include shareholders capital, this issued capital, general reserve, and the retained earnings. This will not be included. Debenture is a loan. This will not be included. So 200 plus 30 plus 15, that's 245. So the answer to multiple choice 27 would be option C. Multiple choice 28. Gordon provided the following information for the year. So we have given revenue, opening inventory, closing inventory, and GP ratio. Gordon took goods 7,000 for his own use. So this is basically drawings. What were the purchases? So we need to calculate the purchases. Now, to calculate purchases, you would need cost of goods sold, because that's opening inventory plus purchases minus the closing inventory. We have the opening inventory, we have the closing inventory. We need to calculate this number for purchases, and we don't know our cost of goods sold, but we can calculate using the GP ratio, because GP ratio is GP over sales, right? GP over sales, right? And this ratio here is 33.33%. Sales is 90,000. So if you do 90,000 times 33.33%, it will give you some number. So I will round this number to you. When you calculate this number, this will come as 29,000 something, but I will round it off to 30,000. So 30,000 is the GP. How do you calculate gross profit? Gross profit is the difference between sales minus the COGS. And this way, using the financial ratios, we will calculate the COGS. So COGS is basically 60,000. If you want, that's 90,000. That's 90,000 minus the gross profit of 30,000. And then the COGS is 60,000. We have the COGS. We just need to use the formula here to calculate the purchases. So COGS is 60,000. The closing inventory, that's 2,000. Minus the opening inventory, that's 8,000. So if you solve this number here, this would come to 54,000 for purchases, but then there are these drawings which need to be added to the purchases, right? So that's why they have given you this information. So it will be 54 plus 7,000, and that's 61,000. So the answer to multiple choice 28 is option D. Multiple choice 29. Lucy has applied the accounting principle of matching accruals. Which action has she taken? Included expenses but not paid for in the financial statements. So basically this means accrued expenses have been reported to balance sheet. So the answer to multiple choice 29 is actually option A, because when you're following accrual accounting, even if the business has not paid the expense yet, the company must record that unpaid expense on its balance sheet, plus the income statement. Multiple choice 30. The same accounting treatment should be applied to similar items at all times. To which accounting principle does this refer? And that's consistency. And the answer to multiple choice 30 is option A. Thank you very much for watching this video till the end. If you like this video, please give it a thumbs up and subscribe to my channel for more videos like these. Thank you very much.